What's up guys, Bill here, and in this video I'm going to talk about support and resistance flips and how I trade them. This is a subscriber requested topic, so if any of you guys out there are watching and have some ideas of some things you'd like me to make videos about, just leave a comment and let me know, or reach out on Twitter and send me a DM and let me know, and I'll do that for you, okay? So let's talk about support and resistance flips. These are a very essential kind of fundamental part of technical analysis, very popular, and a lot of that is because they're very reliable, okay? So when I'm looking at support and resistance flips, you can look at them on all time frames, but I personally use them the most on the daily or sometimes weekly time frames to look for places to potentially take day trades or start short swings, short or long swings really, just to try to nail a high risk to reward entry point, all right? Now, when I am identifying support and resistance areas, what I really want to see are, first I want to see multiple rejections of a certain level, and I want those to, and second I want those rejections or bounces to be significant, okay? I'm not just looking for one or two candles. I want to see an interaction with the level and several days, if not weeks, of selling or bouncing, buying. And I want to see that multiple times, all right, for me to really feel like I can trust the level. So here's an example on Unity. And you can see here, this level I've marked, roughly 33. We get an interaction here that leads to a month-long sell-off of about 25% of the value of the stock. That is a major sell-off, okay? And we bounce, and then we test it again later, and we get another significant sell-off. And then finally, we get a huge stick through it on big volume, finally blasting through that pesky resistance, right? So at this point, I've got this level in mind, and I'm just kind of, maybe I'm setting an alert or something, and obviously it takes a long time for this to happen, but eventually price comes back and tests the level, and you get a nice bounce, a nice $10 bounce almost off this level. So how would you trade this? Well, there's two different ways to really approach it. There's day trades and there's swings. So as you can see, the first time we touched this level, almost to the cent, really nice stick that day, right off the level. You could have played a touch of that level as a day trader. That's something I'll do often at major support levels, is just kind of buy in on the first interaction. If you're gonna start a swing, what I usually like to do is I'm using higher time frame candles, right? So I might let this candle form and then watch for another day or two. And once we start to consolidate here, take an entry in a swing, with my risk being a close below this support, okay? With day trades, you can be a little more aggressive, right? You can try to play the touch or really low time frames like 5-minute candles, things like that. With the swings, you know, you kind of want to see, let it play out, because I'll show you an example later of a failed resistance to support flip, where if you were just patient and waited for that first daily candle that touched it to close, you would not have taken the trade, okay? But this is a classic example. And then we fade back down and we test it again. And eventually we lose that level, okay? So another caveat about these setups is the more these levels are tested, the more likely they are to give in, right? So we tested it twice as resistance and we blasted through it. We tested it once, twice, and then it gave out, okay? So I like to play that first major retest of the level, and after that I kind of feel like I might be pushing my luck a little bit, so I usually will sit those out. Not that you can't get multiple bounces off of a level. We got 2 there, we got down here, we got 1, 2, but I just like to play that first one. I just feel like it's a higher likelihood working in my favor, okay? After that, they can start to fail easier, all right? Now, let's look at an example. This was resistance into support. Let's look at an example of support into resistance. Here's Disney. You can see here, I have this is kind of like a little zone, I guess you could say, but this level is an inside week level. Disney's an inside week coming into this week, so I want to watch Disney. This is the inside week high, but this yellow line here is actually what I want you guys to focus on. You can see all this support here. Now, are these, you know, the same exact huge bounces that we saw from No, but this one's pretty significant. 85 all the way up to 92, a $7 bounce here. So really you're kind of getting like a base that's trying to hold, and eventually we lose it with a very strong candle down, and we come back up, and what do? We retest, fail, and we're heading back down again. So that's just kind of the flip of the first version where we had resistance that turned into support. U was a little bit better example because these bounces were longer. And this is probably why, you know, this fail of this level happened a little sooner in price, is with these bounces that they're still nice little bounces, but they're just maybe like 6 days, 5-6 days. These levels aren't as strong. I would say this is not as strong of a level. So, you know, after this bounce, I would not be trying to go long here again, right? If you see the big moves off these levels, that's when you can feel a little bit more confident that they're going to hold, okay? But that's an example of, you know, the support turns into resistance there. And it's probably, you know, there's a good chance that we might get some more downside. This is an inside week setup. If you guys saw my inside week video, and we're sitting right at the bottom of the inside week. So there is a chance that we could lose this level and Disney could see more lows. Let's look at an example where this failed, because like I always liked in my videos, I like to show, you know, not just make every setup seem like it's great and you're never going to lose on a trade on this type of strategy or technical analysis or anything like that. It is something that you can lose on. So here we see, very similar to U, we see this level where we get a test in a big rejection, and we test it again in another big rejection. Then we get a nice stick on volume through it. But on our first test, we dump right through it, okay? And this is what I was talking about. If you're going to start a swing, now on a day trade, I would have taken this interaction and lost. And we can zoom in and I'll show you where I would have done that. But on a swing, I'd probably say, you know, down here, you're kind of front running a little bit if you wanted to get in at the close of this daily candle, anticipating maybe a move and a bounce like that. I would wait to see the interaction, and I'd want to see the candle close. I'd probably want to see something like there's a little wick down and we close back over, or you bounce right off and we start to consolidate here over the next couple days, and you can take an entry and look for that move back up. But we just crash right through it, right? Now, if we look at the lower time frame, if I was going to day trade this INTC setup where we're pulling back, this is exactly where I would have got in. We come down, and the first interaction of it is a wick below, close over with volume. To me, I would have said, oh, looks like buyers are stepping in here. And then I would have lost, right? You know, at least for me, that probably would have been enough for me to stop out. A higher time frame candle close below my level with even more volume, that would have stopped me out, and that would have been a loss. Not all these setups are going to work every time. It's important to have risk management so that you can take a loss like this, and it's not going to break the bank. It's going to be, you know, 20, 30% loss. No big deal, because we're getting in right at this key level, right at our risk. We're in, okay? But back to the daily chart, on a swing, starting a swing on a name like that, I want to see this daily candle close. So that would be no trade for me. So I'd avoid a loss there. All right. Lastly, let's look at a name where this week maybe we're going to get a nice resistance to support bounce. Affirm had been relatively strong lately, right? We got the earnings gap up with a strong move, making new 52-week highs. And this level right here, around 20, well, just under 20, okay, was a big reject spot. Tested again, rejected again, and then overtaken, and we got a big move. We're almost there now. So early this week, I'm going to be watching Affirm for either a day trade, if we get some interaction with this level, to take calls as a day trade, or just watching the daily candle, maybe Monday's candle or Tuesday's, whatever the case may be, to see how it interacts with here for maybe a short swing back for another leg up. So that's something I'm going to be watching on Affirm. It's very similar look to U. And we'll see how it plays out, guys. So keep that on watch, and we'll try to see if this will work out for us. Obviously, these setups are, you know, not everything's in a vacuum, right? There's other factors. With a stock, it's flow, it's volume, the conditions of the broader market, news and catalysts and things like that. But these are very reliable setups that when you pair them with other types of TA and fundamental analysis can really help, strengthen your trading and increase your profits. So hopefully that helps. If you guys have any questions about this, just leave a comment. Let me know. If you have any requests for content, leave a comment and let me know, and I'll get to it for you.